Welcome to TradeTheMBI.com. This is John. This report is for the 9th of September. And just trucking along here. That was sort of an in between, positive move. Still finished higher than the previous day. From a reading standpoint, didn't really change much, but we did see from an S&P standpoint more short activity stepping into the scene. You also saw the drop off of short-term buyers. So, you know, when you see a market fade like that right after new fund money comes in, the first place you're going to start looking at is the bond market and see whether that money got applied there and that shifted it, because that would be where uncertainty, wants to store itself, or crypto or gold. So those are your only options from that particular stage. So from an NQ standpoint, pushing towards reaching the highs there. That was clean, but look at that strong move. So you can see both S&P and ES. I mean, ES is the S&P, but the NQ, NASDAQ, also representing the same situation. You can see we're just about to move out of that range of orange cut between cyan and red, which usually is continuation. So we'll keep an eye on that one. Now, any pivot back up of our short-term DOC, then yeah, from your steel pops up, you're in good shape. But that spread continuation, no, not a horrible situation at this particular stage. The fact that you got rising red counters your cyan, even though you've got green dipping back and forth. It just shows a lack of commitment. It just isn't the dedicated interest. And there we see in the Treasury, see, big move. And that's your indication that money is seeking safety at this particular stage. That some people are feeling the uncertainty getting to be too much for them to handle, and park it in there, take your yield from that until you have more clarity. And that's because a lot of those readings that we're seeing just reflect a lot of uncertainty at this particular stage. From an oil standpoint, it's not bad. It's not horrible. It's just a continuation. So you don't get any bonus relief there, which is problematic. The euro continuing to rise suggests that everyone believes the dollar is, done at this particular stage, that there's going to be some, major collapse. Does it make a lot of sense? No. But they also know the euro is going to be printing lots more of them. And that's where all the activity is going to be, as far as, where the U.S. is looking to cut spending in some areas. They're looking to expand it in all areas. Though you've got real problems. I mean, Germany is a disaster at this particular stage, and no relief in sight. But see, there you go, gold. That's a huge shift when you get this kind of momentum going into gold. That rarely says good things about the economies and what the expectations for inflation are. But even that, it's the debasement of currency value. So this is where you would expect to see it also in crypto, and then Bitcoin after the big whale sell, supply limitations. Of course, then they were pumping all the different articles about the number of lost coins, and that could be anywhere from 3 million to 7 million, and that means your supply is what, down to 10, 12 million maximum from a float standpoint. Not to mention how many people haven't moved any coins in years. So, that's where the scarcity comes in. From an ETH standpoint, likewise, still holding its gains, is not doing anything. That's pretty weak from a MBI readings in that, because you're not getting the separation of yellow to magenta. When we look at it for the 50K, you can see we had clean rise, and then right when we got the crossover of magenta underneath, you still wasn't a strong short, but it was enough to bring us to the 50%, and then magenta turned around, and as soon as it did, on our way back up. So, and the divergence there is you're seeing in the mid time frames much more bullish behavior than you are in the daily, and that's just the mean reversion that we're getting halfway in the middle of every day. And it's reflected whether it's down in the morning, you get up in the afternoon. If it's up in the morning, you're getting down in the afternoon. Pretty much classic option plays. And intraday, here we go. We saw the early morning buildup, only to collapse, taking out the previous low, testing it, and then right before close, sparking right back up to where it was. So then we can see in the Asia session there wasn't a whole lot of anything, but European, we had the similar situation. Early morning rise, and starting to fall back a little bit from there. But we're just getting normal play at this particular stage. We're still waiting for, it's not we, I think it's mostly the bigger players are waiting for the Fed to make a decision so they have clarity. And that's literally what they're looking for, is just some sort of stability to know in the interim, they're just trading. Plain and simple. That's the long and the short of it for now. As always, anything relevant, I'll put it on our team chat.